So every quarter, public companies drop these massive, dense financial reports. It's really easy to get lost in the jargon and the numbers. But what if we could translate all that corporate speak into a story that actually makes sense? Well, that's exactly what we're going to do today. We're cracking open Salesforce's latest quarterly report to figure out not just where the company is today, but where it's trying to go. Let's dive in.
Here's how we'll break it down. First, we'll talk about what this document even is. Then, we'll get a quick snapshot of the key financial numbers. After that, we'll dig into what's actually driving their growth. Then we'll look at the risks they're telling investors to watch out for. And finally, we'll pull it all together for the one big takeaway you really need to understand.
All right, first up, let's crack the corporate code. We need to demystify this thing called the 10Q. Honestly, the best way to think about it is like a company's official, legally required report card. And trust me, it is packed with info.
And that kind of makes you wonder, right? What if you could find a company's entire story, its financial health, its big strategic plans, maybe even some of its secrets, all laid out in one single document for anyone to read?
Well, that document actually exists. It's called the Form 10Q. And this isn't some glossy press release or marketing fluff. Nope, this is a mandatory filing with the SEC. It is the official source of truth, and it's the foundation for everything we're about to talk about.
Okay, on to part 2, Salesforce's financial snapshot. If the 10Q is the full health checkup, then these numbers we're about to see, these are the company's vital signs.
First vital sign, the top line, revenue. For the third quarter, Salesforce brought in a massive $10.26 billion. Just to be clear, that's the total amount of money they made from sales before taking out any of their costs. Now, once you subtract all the day-to-day costs of actually running the business, R&D, sales, all that stuff, you get what's called income from operations. For Salesforce, that came out to $2.19 billion. This number is super important because it tells you how profitable their core business really is. And that brings us to the famous bottom line. After you account for everything else, we're talking taxes, other income or expenses. Salesforce's net income, their actual take-home profit for the quarter, was $2.09 billion. But here's the thing, a number like that doesn't exist in a vacuum. That $10.26 billion in revenue, well, it's actually up 9% from the exact same quarter last year. And that tells you that even for a company this huge, Salesforce is still growing at a really healthy clip.
Which leads us perfectly into our third section, the engine of growth. We've seen the what, the big numbers, but now let's get into the why. What's the real story behind those numbers? And if you dig into what management themselves are saying in the 10Q, their story really boils down to 3 key things: a huge strategic bet on AI, a strategy of growing by buying other companies, and a very disciplined effort to become more profitable through restructuring.
The push into AI is absolutely front and center. The report specifically calls out the introduction of Agentforce, which they describe as a whole new platform for deploying AI agents that can basically act on their own. This isn't just a small new feature. It sounds like a really fundamental shift for them.
And that connects right into the second driver, growing by buying. They're not just building AI, they are going out and buying it. The company officially disclosed its acquisition of Informatica for a jaw-dropping $9.6 billion. That's a massive, massive bet on the future of data and AI.
But here's the interesting part. While they're spending billions on one hand, they're tightening their belts on the other. The report also details these ongoing restructuring efforts, which include things like workforce reductions and cutting back on office space. This is that third piece of the puzzle, a clear push to trim the fat and drive more profitable growth. Okay, so we have this picture of aggressive growth and strategic spending. Now let's look at the other side of the coin in part 4, risks on the horizon. Think of this as the fine print in the report, the part with the doctor's warnings.
See, the 10Q legally requires companies to tell you about what could go wrong, and Salesforce lists dozens of potential risks. We've boiled them down into 4 main buckets here. You've got operational risks, like a data breach, strategic risks, like facing fierce competition, financial risks, like their stock price swinging around, and then just general risks, like a downturn in the global economy.
Now, buried within that long list of risks is a section you always want to check out, legal proceedings. This is where a company has to tell you about any significant lawsuits it's involved in.
And the filing details what it calls the Backpage litigation. It says Salesforce has been named as a defendant in multiple lawsuits. According to the filing, the plaintiffs allege they were victims of sex trafficking advertised on Backpage.com. The claims are based on allegations that Salesforce provided its customer relationship software to an affiliate of Backpage.
The filing concludes with a statement from Salesforce saying it intends to defend its interest in these proceedings vigorously.
Okay, let's pull all of this together in our final section, the big picture takeaway. After going through the numbers, the strategy, and the serious risks, what's the one central question that really defines where Salesforce is at right now?
The entire report really comes down to this one core tension. It's a balancing act. On one side, you have this incredibly aggressive, expensive push for innovation, these huge bets on AI, massive acquisitions, and on the other side, you have this drive for operational discipline, for cost-cutting, and the huge challenge of managing some very significant risks, including those legal battles.
And if you want to see that tension captured in a single mind-blowing number, here it is, $52.4 billion. That's the amount of goodwill on their balance sheet. In plain English, that's basically the premium they paid for companies they bought over and above what those companies' assets were actually worth. It is a tangible $52 billion bet that their acquisition strategy is going to pay off big time.
And so, that's the final question this 10Q really leaves us with. It's not about whether Salesforce is growing. The numbers show that it is. The real question is this. Is the company successfully balancing these massive, expensive bets on the future of AI with the immense real-world challenge of managing its operations and navigating its risks today? The answer to that is going to define their story for a long time to come.